Okay, welcome everybody as you're coming into the room. We are just about to get started. We've warmed up with the speakers and have a bunch of people popping in from the waiting room. And if you're coming in, please um, turn off your camera. We're just using the Zoom video. So we're keeping folks on the stage, or you could use the speaker view so that you could see who's speaking to pop onto your screen. If you have questions at any time, please feel free to put them in the chat, because I will be looking at the chat all the time for different questions and points of feedback and such. And really looking forward to covering what we've got today. Um, let's see. So what I'll do is we'll start with a very simple introduction. I'll introduce the speakers as they are on my screen, going clockwise through them. They'll tell a little bit about themselves, what their experience is in working with companies in U.S. market entry and the core offer that they provide, and then a little bit of the country specific background, and then we'll get into topics that we want to cover as a group around a number of different areas that matter to companies that are making an entry into the US market. So, with that, I will start with Sarah, who is at 12 o'clock. Hi, Sarah. How are you?
Hi, Phil. Thanks for planning this and thanks for having me. My name is Sarah Petty. I have about 20 plus years experience in marketing, product strategy, and sales ops. I have worked in many international markets, LATAM, EMEA, APAC, and I've also had the unique experience of working abroad for about 4 plus years and launching in the US market while living in London. My company, Helene and our company is called Mind the Gap Services, and we provide interim C-suite CMO services to help go to market, to help with important inflection points, and really get the brand hitting those KPIs or those different markets. Thank you.
Thanks, Sarah. Helena, would you like to go next?
Hi, I'm Helena Fowler. As Sarah mentioned, I'm her business partner. And I won't bore you with reiterating exactly what she just said, but I will say that I have experience in SaaS, hardware, software, B2B, B2C, B2B2C within APAC, LATAM, and EMEA, and launching some of the businesses and market expansion within those spaces, as well as having a tremendous amount of US experience as well.
Standing. Ashley would go next, followed by Michael.
Awesome. I'm gonna let Carl take it since he's our marketing guru. He will explain this much better than I do.
Yeah. And we're sort of a duo infernale here, a dynamic duo. Carl Hinrichsen, I am founder of a company called Exec Functions, as well as a joint venture with Ashley Trick of the Kismet Fund, which we're calling Colosum. This is based on our experience as ecosystem and traction builders, myself, as well as Ashley's experience being a venture capitalist. And we're helping founders enter the US with building the right kind of traction and investor narratives in mind, not falling into the copy and paste trap. Can draw from Ashley's own startup and tech experience, as well as my 15 plus years in enterprise. And that includes building Facebook's global sales partner program, bringing it to 40 countries, and helping Amazon enter Europe with the Kindle business.
Pretty amazing stuff. Great to have you both. Michael, you want to go next, and then followed by Marta.
Happy to. Thanks, Phil, and thanks everyone for joining. So, Michael Loganoff here. I'm an investment manager with Invest New Zealand, and what that means is twofold, really helping investment in deals that are entering the country, as well as helping companies that are trying to raise capital and execute deals externally. So, I really help Kiwi companies with raising capital and meeting the right investors here in the States and in Canada. And so just excited to kind of chat about some of the learnings and some of the things that I'm seeing in the market. But I guess I'll hand it over to Marta, Phil.
Perfect. Thank you, Michael. Hi everyone. Nice to meet you all. My name is Marta. I'm program manager at Mind the Bridge. And for those who don't know Mind the Bridge, we are an innovation consulting firm where in one side of the business, we work with Fortune 500 companies in all their types of innovation needs. And on the other side, we work with a lot of like public entities and governments, helping them accelerate their own ecosystems from like go-to-market strategies and expanding to the US till like also attract investment. So yes, super excited for talking over with all this amazing panel to discuss about the US expansion. And yeah, previously to that also I supported many founders expanding to the US market, even leading the growth for a Korean startup. So yeah, super excited to be here. Thank you.
Thank you, Marta, and thanks everybody for joining. As you all know, I'm Phil Dillard, founder of Thruline Networks, and we're an investing and advisory services firm that works with early stage companies to help with a number of different things, but primarily the support that comes from a fractional CFO or CRO. And we are close to launching our first fund in the first quarter of 2026. I've had the pleasure of working with all the folks on the call, and we have worked over the years with companies coming from Finland, Sweden, Denmark, Italy, Korea, Taiwan, the Philippines, New Zealand, Australia. I mean, the list goes on, right? And we've seen a lot of different commonalities amongst these companies, but also some unique differences. So we're going to make sure that we cover all the things that people need to consider when they're thinking about the U.S. market, traditionally, but also given where we are today in the world today. So I'm going to start with this one, and I'm going to say I think of the start of 2026 is that it's the start of like war and peace, right? It's a tale of two cities. It's the best of times, but it's the worst of times. Some would say it's a great time to be coming to the US market, but there are a lot of challenges and headwinds that weren't there, say, 24 months ago. So I'm curious who would like to be bold and get us started in this conversation. Why do you think it's great to be coming in the US market? And why do you think it is what is a new and big challenge for coming to the US market? Who'd like to lead us off?
Phil, I'm happy to kick things off here. I'll maybe start with the latter portion there as opposed to the former. I think one of the things that makes it a challenging market right now in the US, particularly with international companies and founders, is just the fact that there's a higher bar. There's a higher bar in the market, especially for looking at things from a fundraising perspective. So venture investors are being very, very judicious with their capital as a byproduct of the wider macro environment, as a byproduct of the wider exit environment and liquidity crisis that you're seeing in ventures. So I think just thinking from an international perspective, if you're an international founder, just keep in mind that the bar is going to be higher, right? I mean, if you're trying to break into the US and if you don't have offices here, if you don't have a team here, if the founder's not here, then the bar is even going to be higher then too. So if people are looking for 1 million ARR, maybe you got to have two if you're an international founder. So just you have a higher hurdle. It's going to be tougher, but there's still opportunities to get deals done. And I think that's where I would talk about it being from the best of times in the US is ultimately capital and deals are getting done. They're finding great companies. So if you're building a great company, there is hope, and I would have conviction behind that. So maybe I'll pause there, Phil.
Sure. Can I double click on one thing before I hand it off? And I'm looking to see who's next. And no one else has really come off mute yet. So I think we're still good to do this. What I'm thinking is in some countries, 500K, 1 million in your industry is great in terms of revenue, annual revenue of the previous year. But in comparison to others in the market or comparison of like translating, I don't know, Australian dollars into US dollars, there is a smaller significance of traction. Can you talk a little bit about revenue and traction and relevance to the market? Like how much traction does someone have to have and for what you're seeing to be credible, besides just the total aggregate number?
Yeah, definitely. I think that's an excellent question, Phil. And some of the things that I'm hearing from investors that I'm talking to on a weekly basis is, again, it's just that bar being higher. But ultimately, one, from just a messaging standpoint, if you want to be raising in the US, if you want to be doing business in the US, talk in US dollars, right? Don't let people have any confusion of, oh, are we talking Aussie, Canadian? Are we talking New Zealand? So make it really clear and obvious to people when you're communicating with them, one. But then two, just keep in mind that the bar really is raising, right? So that 1 to 2 million ARR is something that I heard from an investor a couple weeks ago. They're looking for companies that are hitting over 100% growth, and if you're at 70%, they might look at you, but they really want to see 100% year over year. And beyond having a strong, CAC LTV ratio, they also want to look at what's your CAC payback too, right? So how much are you actually how quickly are you making your money back from your marketing engine and your sales engine? And so it's just keeping all those things in mind. But those are some of the things that I'm seeing. And even on that last example there on payback, if it was 18 months payback as kind of the litmus test, now it's more like 12, even in an enterprise sales cycle. So that's just some examples of what I'm hearing and seeing of that bar jumping up and being raised.
Yeah, and then I would love to complement that also in terms of just the mindset you got to be going in with, which certainly with a lot of the European companies, like being German myself, that mindset doesn't sink in until you've actually spent some time here often, right? Like just talked to a founder 2 weeks ago, and he's like, "Yeah, I might be joining or like coming to the US in 2027 because I want to build my product first and want to make sure that it's good." And like your product is gonna be outdated the moment you show it to the public. You gotta actually iteratively do this, and you gotta be in this world where, to your point, you gotta be able to show through the traction and unit economics that this thing will scale when people put money into it, and that this thing has been built not just in your own mental ivory tower, but solving real customer problems that exist at scale, and they have validated it, and they're confirming that this is truly a thing. So that I think is the main maybe also change in terms of your like point on the best of times, right? Like where in the past there was a lot more spray and pray from a venture perspective,
Yeah.
and now investors can actually double down on exactly how does your business work and like go and show us and get much more executionally involved, and will stay away from you unless you show that you can very comfortably live in this super agile iterative space.
You bring up an interesting point, and it relates to something I saw in the chat that says, "Does stage matter or for these companies, period?" Right? Because some people you see in different markets, and actually, you guys are probably we're focused in climate tech, and you're in Web3, right? In some of those areas, and a really good idea coming from someone with a really good market positioning, it may not matter what stage they're in, but for us, it's going to matter a lot if someone is in a pilot stage versus a growing the plant, a first production plant stage. So can you talk a little bit about how stage matters from how you guys are seeing things? Oh, you're on mute, actually.
Sorry, I'm here. Okay. I think you nailed it, right? I think it really is founder specific, is vertical specific. I don't think I actually have a great answer for that. I was actually hoping someone else on the panel was going to tag in and have a better answer for that. I don't think I do. I think when you're coming in, you want US market entry as early as possible, I think, for at least the things that I'm looking at. So that will obviously impact, how investors view you, right? If you get here later, and you have a really established product elsewhere, but you can't figure out how to translate that, you probably have a problem.
Yeah, you don't want to do it as a side gig as well, right? Like you either enter the US and you're fully committed to it and becomes your main market,
Right.
or maybe you're not ready yet. So a lot of the work that needs to happen before that is, okay, does this mindset work with how I want to build? And also, what signals can I get that this market would truly be right for me, right? Like we're thinking a lot about like what kind of tests and criteria can we put in front of founders to figure out, is this the right time?
And how different is the market you're operating in now versus the US, right? Depending on where you're at, the hurdles are different.
Very good points. All. I'm curious. Like, well, I see Sarah flash, and I want to get what Sarah had to say. I was going to ask Marta too. You have specific programs for this. where you bring cohorts together. And they've probably changed the experience of the cohorts over the past 18 to 24 months. So I'm going to give Sarah a chance to speak and then see what Marta has to say.
A lot of it of what people are saying is just the fact of the foundational aspects of it. So you have to make sure the audience is still in the US. Just because it's in Italy or Spain or Latin America, parts of Latin America, doesn't mean it's the same problem that they're trying to solve for in the US. So it's coming back to those foundational aspects. I've seen a lot of different brands where they think it's the same problem in a certain region, but you have to come back and see, is that the proper ICP? Is that the are those the proper solutions to the problem for that area? Because it could be localized for different parts of the country and different parts of the world. So I think it goes back to what we were talking about before is, do you have actually a customer base there, an audience? And also, do you have partners in the US that you can piggyback on, that you can already prove your point to investors and say, hey, look, they're doing this with us because they know that our product solves that problem or our solution solves that problem.
Makes a lot of sense. Marta, you want to go ahead?
Oh yeah. No, yeah. I feel like Phil, what you mentioned, like it's such a interesting question and a little bit controversial in that sense. But yeah, no, to give some reference, yeah, at Mind the Bridge we have worked with like many different founders and in different stages. Like I've been running acceleration programs from like really early, like from seed stage to like almost like Series C stage of founders. So I've seen so many stages of like, okay, what is the right stage to jump into the US market? And I agree with Ashley that in if you're seeing it more in the venture capital like lens, obviously the earliest the better because obviously you need to take into consideration obviously the valuation of your company, that sometimes we have problems with founders from Korea or founders from Europe that their valuations have been really damaged on that sense. But in terms of like more tactical GTM focus, I would say there there's not always like a right time because obviously when we are talking about the stage, maybe like obviously like the valuations, for example, in Korea, the stage of a Series A is like pre-seed, like seed stage in the US. So I would not think more as an stage. It would be more about like is what Sarah was saying is like, is the market ready for me? Like, is the time ready for it? Because like at the end of the day, US is another market, and it's really important to like first of all step on there, talk to potential customers, see if they are experiencing the same problems that maybe are working in another country. And if those kind of signals seem right, then it's really more diving into it. And I always say to our startups to like, please, like be out of the room. I don't want the iteration of what I remember someone was talking about it of like, yeah, on 2027, I'm going to have my product ready and I'm going to be able to run. No, please go with a super scrappy MVP, get out there, get feedback, talk to people, and then you're going to see that traction popping up or not. And it's really about like, I feel about what you guys were also mentioning of the mindset of like really being super fast. Like US is super important in terms of like you can get a lot of revenue and a lot of market, but at the same time they can eat you so fast. Like it's so easy to burn money on the US. And unfortunately, I've seen startups of like, oh yeah, I'm gonna go full in, and they died for that to have burned too much money. So it's really like balancing out, but yeah, it's a lot of like having that mindset of like getting out there and truly get some real data and some real traction. So then, like, once you unlock the traction, you're gonna unlock the investment and go on that sense. So yeah.
And if I can give a quick build on that, right? Like, I think the right mindset is not, hey, I'm coming to the US because everyone's doing it, and I just got to find what's the, this hidden playbook that everyone's using, and then I sort of color by numbers follow that playbook, and surely things will work for me. But in contrast to that, you want to have a much more hypothesis-driven mindset and like literally write down what you're looking to learn and in which time and what signals will tell you whether you're on the right track or not, whether your hypothesis is right or needs refinement. and then you can constantly like force yourself to like adjust course if necessary, and not just sort of blindly run down into your own demise.
I think it's a really good point. I think over the last couple of weeks, I've met with cohorts from Italy and Korea, and for some of those companies, I was like, yes, this is a good time for you to come. You should be putting your best effort to make something new happen here. There were three categories: make something new happen here, but keep doing what you're doing at home. Category two was transition from what you're doing at home to here because you're going to get out of your small market into a big one. Category three was don't even think about this right now. You don't have the budget, the time, the traction, or the real understanding, and you should really think about whether you're doing a field trip to learn or actually building towards a launch. But I wanted to make that comment, but I saw also that Michael came off to share something after the last.
Well, Phil, that's it. That this dovetails nicely, I think, and it kind of from a fundraising perspective, Carl and Sarah and Marta all brought up those points, and ultimately, you have if you're coming here to raise capital from the US, the question is why? Why do you want to come to the US? Do you want to come to the US because you think that, Silicon Valley is paved with gold and there's just money that's just falling out of coffers left and right? You walk down Market Street, you walk down Sand Hill Road, and next thing you know, you walk out with 5 million bucks. It doesn't work that way, right? So you have to have some reason as to why you want to raise in the States. So do you have, Sarah, I think you mentioned this, right? Do you have traction in the States, right? Like, do you have customers here? If it's a more of a deep tech company, do you have partners here, right? So just having an answer to why you want to raise in the States is incredibly important. And to me, that answer usually boils down to having strong traction in the country.
It's funny. We even saw a company that didn't know that they had how much traction they had in the US. We started with them. They were trying to come to the US from Spain. And we said, okay, well, what's the geographic distribution of your customer base? And they're like, well, you don't really know. Digital product sold online out of Spain. So yeah, having that picture. And then we had other groups who say, well, I need an agent who's going to sell my product. And then I go, okay, they're going to take ownership of your product and take ownership of selling this in your market. Is that what you really want? And another one was like, well, I'm looking for a broker to be like my presence on the ground. And I asked, who are you going to bring over here from your team to be with them? And they kind of looked at me cross-eyed because I think in different countries, the idea of an agent or a broker versus a execution partner on the ground, right, versus a business that might use your service, like a distributor, for example, they don't understand sometimes the different terms. So I saw a little reaction here. I saw Ashley nodding her head. I saw Sarah nodding her head. I'm curious about your points, your feedback on what you've seen in those areas, and if you have any tips or best practice. Oh, Ashley, you're muted. Sorry. Oh, Ashley, you're
Oh,
muted.
they
There
were
you go.
muted. We were laughing. We had a guess at which country that founder you just referenced was from. But we've seen the same thing.
Yeah, and anecdotally, right, like getting a distributor here and getting them to work for you, even if that were a good idea, which is often not, the distributors also work differently. They want to be pitched to, right? Like they don't want to take your business in many scenarios, or you have to pay exorbitant extra money for training and marketing and whatever else you thought they should be doing for you. Suddenly you're like paying them for the privilege. So very, very different mindset, but I'm really curious to hear what the experts in the room would build on this.
Sarah, I thought you had something. Go ahead.
Yeah. So, I mean, I have so many funny stories just with the communication part of it. But I think it's, I really hiring somebody that you trust that's already ingrained in the culture is so key. And a lot of European companies, depending on what part or Latin American, there's that trust that they have to build first because it's a different way of doing business, regardless. And I don't think I think one of the tips, and I think my CEO, one of that I worked for in Europe, he realized that it was such a smart move to hire me because not only because of my experience, but because I am American. And if you want to expand in the American market, it's somebody that has that expertise, that's grown up there, that understands how the market is in the different regions. And but I also think it is a process for the founders to start that trust and to figure out, okay, so this is culturally, and to be open-minded, but it is, if you can find that right person, like Helena and I are, we do this a lot. But I think it's just so important to hire somebody who is from that area. Same thing from that area. If I wanted to expand in the UK or New Zealand, Michael, it seems like, you're an honorary Kiwi. So I would reach out to you and find somebody that you know. But it is so important. And that's the number one tip I would give.
That gets me thinking about two important topics to bring up. One is trust and building relationships, and the other is the policy awareness as well as the market awareness. So, and feel free to grab on either one. So let me set the foundation. In the trust and relationship building, I'm learning for sure Asia, Middle East, Latin America, getting to know who you are, building a relationship, and understanding how we work and how we do deals in our culture. We spent years with some of these relationships from people from these regions to the point when they're like, oh yeah, Phil's OG, he gets us, he speaks our language, literally in some cases, and just understanding the difference in how business is done and things you could say and things you can't, or how to handle yourself in meetings so they can feel comfortable putting you in front of other people. That's a little bit on the relationship side. On the policy side, I think now it's different. Now there are headwinds for some of these companies. You want a US partner, and I said this to somebody a week or two ago, they might want to come here, launch a US business, transfer the IP to that business with a partner in the US, whether it's a joint venture or something of that nature, so that they're not worried about tariffs, so they're not worried about some of the uncertainty in the political environment, and they've got to figure out an efficient way to handle that. So I'm curious, whichever one of those anybody wants to grab. What sort of thoughts do you have or recent experiences that you would give to someone to help them think through how to make the decisions that are needed? Like, don't everybody jump at once. Go ahead, Sarah, or I saw Sarah doing something. Marta, you look like you're thinking. Marta, you want to go first?
Yeah, no, I feel like obviously it's all about like culture wise. Like I agree with Sarah. It's super important to have someone there that actually understands about the culture because obviously as every market like it's key to understand the culture to make business. But also on the other side, I feel like also it's super important to not just let that person to do the business for you, but actually to have this knowledge management where you get that knowledge transfer. Because I see a lot of errors on founders that they are like, oh yeah, I'm just expanding to another country. I'm just gonna hire someone local there. And then from there, basically like that's the deal. And I feel that brings a lot of like blindness in terms of like really understanding is that the right place is where I want to hear like dive into because at the end of the day once you're gonna want to raise funds and everything, venture capitalists here and in such early stage are gonna want the founder to be the one in front of the customer, in front of closing the deals, understanding truly like the market out there. And if the CEO doesn't know that, then and they're not gonna raise funds. So I feel that's really important on that sense to have this balance.
Well, and just to piggyback off that, I tell founders all the time, like, who can sell your product better than you, right? Like, nobody should know this better than you, right? Like, you are the person who should go out there and be doing that. And, kind of on the topic of trust too, like, when I invest in a company, there's a fair amount of trust that I'm putting in that founder, right? I think that's everything. And kind of to Michael's early point, like, there are people who come here and they think about, it's the Silicon Valley cash machine. And I think, that happens in other countries too, right? I have founders go to the Middle East all the time. And they're like, well, they're just printing money over there. I'm going to go there and get my check. And it doesn't work that way. When I started doing business in the Middle East, you have to go 2, 3, 4 times a year, build up those relationships. There's a trust that has to be established first, or you're not getting a dollar.
It was funny, actually, as you started to say that, I wrote down, how do we accelerate the process of building trust, right? Because it's something that takes a certain amount of time, but there's a there's certain ways to kind of let someone see that you're actually committed to them or the region or the things that they care about. And the other thing that kind of well, that was the first thing came to mind. The other was like, you're putting trust in this founder and you want to get to know them better, faster. There's one founder I met that if I had the money, if the fund was up and running, I probably would have regretted making the investment that I wanted to make at the time I made it. Because as I got to know him and I learned more things about him, I was like, wow, he represents well, but I didn't poke on this surface or on that surface. And there's a lot of work that he needs to do. So it turned out to be a riskier investment than I thought at first, right? So I'm curious if you or anybody else, start with you guys, have tips on like how do you get to know each other better? Because founders need to do this with investors and vice versa to build trust and understanding about who that person is, what their strengths and weaknesses are, and how you can help each other succeed.
I mean, you and I talked about this, right? This is sort of how you and I connected. It was like, I have this philosophy of like friends first, business second, right? I don't want to do business. Life is too short, right? I don't want to do business and spend time with people I don't enjoy as humans. That's a very big deal for me. And so, it's let's have coffee. Let's go to this holiday party. We just went and did karaoke with a founder that we're working with the other night. It was hilarious, right? But like I got to know a lot about him as a person and his background and his, about what it was like growing up. And I think it strengthened the bond there quite a bit. And so I think that is sort of just my general business philosophy. And it makes doing my job a lot more fun.
Right, right. And I think that tells you a lot about the people's agility to deal with situations that no one could possibly predict, right? Like really depends on like what what you all enjoy as well, right? But do an improv session with your founder, right? Like go to a stand-up thing, or something like this, because you get to know them you get to know their different strengths, and that will come in incredibly handy. And people will, like any founder and any founding team has to go, to your point, through so many stages, right? From founder-led sales to maybe teaching others that are in-house to sell on their behalf, to teaching partners to sell on their behalf. And every time you got to run your company somewhat differently. Can they go through those stages and grow along with that is what investors want to see. And do they take conclusions and like genuinely listen and understand feedback that they're getting in all of these stages as well? Coachability from the investor, feedback from the customer, right? Like you've sold to 5 companies. Who knows if that's all the 5 you're ever going to sell to, right? Like if you never adjust your product to what the market truly needs, you might run out of customers. So I think that's why it has to start with you sell yourself, because then you can adjust the product to truly what the need is. And then you can explain to others how to sell the thing on your behalf. But automatically you're going to be slightly further away from the product. So you got to nail the first part.
At the same time where the product is actually like the product and the market are changing rapidly, right? Which actually probably adds to some of the complexity and actually some of the segment specificity, right? So, Michael and I were talking about some of these companies from New Zealand that were doing some heavier climate tech, more capital intensive, more process intensive. That market is not going to change it, Mark, as much as if you're looking at municipal solid waste, or Marta and I were looking at companies that were doing some things around ocean technology and cleaning up ports and things like that, which is different than if you're trying to do an AI focused consumer application, pick your head up in a week or a month, and it might be radically different and kind of impact the strategy. But I think it's really interesting that the building relationship with the founder is such an interesting thing, and it sounds like differentiated. I want to say, do you guys think that there is a trend that investors have to be more and more connected with founders and vice versa to really identify, connect, and be able to drive value? Or is that something that we're differentiating in, right? Are we the leading edge, or is this a wave or how the pendulum is shifting? What do you think about that?
I mean, I think the days of spray and pray and like pre-product, pre-revenue are sort of behind us, at least for now. And I think that does require, spending a lot more time getting to know the founder and getting to know the company.
Any other thoughts on that for folks? Marta,
Yeah,
go ahead.
yeah, I want to piggyback on that because I feel like what Ashley said is true. Like, and for all the people in this room, like what they said about the pre-revenue or things like that, this is over. Like we see every day founders here, local founders in the Bay Area, that they get revenue with the most scrappy MVP ever. So the pre-revenue investment thing is over, totally. And then also it's like a lot of founders like come to me, and obviously like at the beginning of the programs we're like, okay, what are your KPIs for this program, like how can we help the most, and a lot of founders are like, oh yeah, Martha, I want to raise $10 million. Like, I'm like, guys, like let's reassess this situation. And yeah, I feel it's super important on that, like being super like customer obsessive. And then nowadays, the shifting that I'm seeing on all the venture capital firms and all the venture capital firms that we work together is that they want to be there. Like more like the early stage venture capital firms, they are there also. Like the way that they sell themselves also is to open their doors and be that connector for them. And obviously, US investors compared to like Korean investors or other investors are really by your side. So are gonna be it's super important also to choose the right investor, not whoever led you the money, because sometimes maybe they are gonna invest less on you in terms of money, but you're gonna get bigger outcomes in terms of like mentorship, guidance, and things like that. So I think it's really important to like what you guys were saying of trying to be friends and find that common ground, because obviously with venture, and that's what I feel like if you realize like now with A16Z, the speed run, like they are really doing a lot of these kind of acceleration programs for their just venture capital firms, just to also understand who to get to know more the founder, and to see like how they can go from there and to work more on the side. So I feel this shift on venture capital firms is really interesting, that they are more in the operational side also, rather than just the investment side.
I love
Marta,
that.
I might.
Go ahead.
Sorry. Oh, thanks, Phil. So, Marta, I'll definitely piggyback off of that and some of the comments that Ashley made too. It's, ultimately one of the things I always tell founders is, do you want an investor who is helping you before you're financially aligned, or do you want someone who's only going to help you after their name's on the cap table? And so if you have someone who's saying, oh, hey, let me open up my Rolodex. Let me introduce you to maybe here's some folks over here that can be maybe a channel partner, or hey, maybe this is an opportunity for you to meet other investors who might want to participate, or maybe these are some customers, or maybe here's an advisor, and just kind of opening up that Rolodex of relationships to support before they're on the cap table. Because obviously, once they're on the cap table, you would hope that they're going to be helpful because they're incentivized to be helpful. But if they're helping before they're incentivized, then that's probably the sign of a pretty good partner. So that's just one of the things that I think about, to just piggyback off of what you were saying, Marta.
I love that,
Yeah.
Michael. Go ahead.
Um, I think as part of the trust building and getting to know the founders, I think there is a bigger desire to be operators. That is one of the things, even in the founders that we choose to work with and providing fractional CMO support to, we're looking at founders that we would personally want to invest in. As we think about how we want to build a fund, who would we want to invest in? And sometimes we'll take that first step with doing a brainstorming session with them, like a free brainstorming session or free review of one of their pieces of collateral, just to get a better understanding of how they work, how they think, their coachability, all of these things that Ashley, Marta, Michael, that you and Sarah, you've already mentioned. But we do this so that we can really understand, are they, as a first-time founder, do they have business acumen and maturity? I can't tell you how much the AI explosion of dollars has really created this lack of understanding of what a reasonable seed round looks like. Like we've talked to a lot of founders that are like, I'm going to do a $10 million pre-seed or seed. And I'm like, no, you're not. um, and it's not that you don't have something worth investing in here, but that's just not reasonable or logical. And so sometimes that coachability and really understanding that thought process is super important, and that can go hand in hand with building the relationship. And so sometimes we'll just offer out, like I said, brainstorming time with them to get to know.
I talk about that as, trust through education, right? It's like I'm going to be here to educate you and teach you how this process is going to work, and you are going to trust me more as we go through that, right? I think, that works, connecting with VCs, that helps when you're educating your customers, right? Like, again, nobody knows the product better than you. And so my product is that I introduce you to the VCs in the Valley, right? So like, let me educate you on what this is actually going to look like. And then as you see that the things I have told you come to light, you're going to have more and more trust in me and my opinions.
Which
I was going to say, I love that term, trust through education. I'm going to borrow it. I'm going to come back with what I was going to say
I
after.
stole that from Michael Callahan, who you know. So shout out to Michael.
Oh, there you
That
go.
was his.
It's all amongst friends now. There you go. Go ahead, Sarah.
I was just gonna say that yes, through the process of getting to know the founder, knowing that culture, whether it's China, EMEA, or somewhere else, and them building that trust, they're going to trust when you do educate them. They're going to become more coachable, and also then that caveats to moving towards okay, if it's something complex like health tech and they have to get FDA approval, or AI with the different laws that are coming into effect state by state, they're going to start to trust you as well as an operator and an investor to know how to figure out the complex market we have here. Because there is, like Helena and I have talked to so many health tech companies that were like, great, this is, amazing. What about money to get FDA? What about money to get FDA approval? Oh, we haven't even thought about that. Well, that's, you got to start thinking about that and planning for that from the investment side. So I think it's so connected, and I do love trust through education. I will use that. Thank you very much.
I think there's another part of this that we haven't talked about yet, and it's the collaboration that's happening amongst investors. So, 18 months ago, there were people who were in the climate tech investment world that I didn't know and was trying to figure out how to get to, right? And like everybody, somebody appears like they're farther down the road or than they are. But when you get closer to them, they look a lot more like you close up, right? So I don't have a problem picking up the phone and calling, Tom Chi at One Ventures, or some of the Maya Hassa at Circular Innovation Fund, or some of the other people who are investing in the same areas. And I go, hey, I look at company X. I think that they are aligned with your thesis. They're in line with ours. Have you seen them? What do you know about them? And, I've gotten, oh, I've known this person for a year, or for 5 years, or for 10 years, or we looked at them and we didn't like this. And I was like, oh, interesting. I've been working on this with them. What else have you seen around? So the collaboration, the growing collaboration as potential co-investors for us is like, well, I know you're good. I know you're good. And I trust you at this peer level of an investor and an expert. And if we're now sharing our insights and reducing our risk and reducing the cost and effort to really understand the company, well, now we have more views of the founder and of the company, of the market. We can invest with more confidence and not only increase the level of trust amongst each other, but around a startup or around a market. And I think there's a level to that I didn't even realize when I was a founder raising money before, but that you see now, and I think matters now more than ever. I'm curious if anybody has any sort of pure level insight that wouldn't be transparent to the founder, but that you found recently that's really helpful to this market. I see you've already come off mute.
I had a thought. Well, I don't know that I'm adding a whole lot to what you just said, but from a purely selfish standpoint, if I can have somebody that I know and trust, and they've done the DD on this, right? And they are maybe even more educated in that space than I am. That saves me time, right? That saves me my time that I can then go spend on this other deal that maybe I'm the subject matter expert in that one, and I want to go deep down the rabbit hole, and then I can do more deals that way. Invest more money, make more money. So from a purely, selfish standpoint, being able to share deals with people like that makes a ton of sense.
Yeah, and I think that goes to the point of just understanding what, like for a founder, right, to understand what the world is that an investor operates in, right? Like they are not sitting there waiting to be somebody's ATM or cash machine, right? They are fundamentally founders too. They have gone and raised that entire fund that they're deploying. They got to report back to limited partners, right? Like they got to be able to tell the story of your startup on an ongoing basis when they get an email or a call. So you want to make sure that you really see your VCs as partners, pick the right ones that match with what you're looking to build, and have have that baked into your entire mindset and process, in particular as you're entering a new market. And it's fine to say no to the wrong kind of money, and it's fine to say no, we're not, doing the US just yet, or not ever, right? Like I think the intentionality is just the name of the game.
Yeah, I love that. I would add that since our core LPs are family offices, and we've been spending a lot of time digging the family office market, people should understand that the family office market is also very different than the venture market. When they move money, how they move money, who they need to respond to, who they hold themselves accountable to. It's like inside the family or the people that they aim to serve, but not necessarily the venture math that makes something work for a venture fund. So understanding, everybody says know how your investors make money or how they think about what success is, but I don't think founders know or have the transparency to possibly understand how this is changing at the way and the pace that it is. So I appreciate Carl's comment on the differences in the investors and such. I'm curious what else brings to mind from folks in the room. Michael.
Yeah, I want to kind of double click on points that Carl and Phil just made. There's different flavors of capital, especially across the states. I mean, investors in Silicon Valley are different than investors in New York. Silicon Valley can be a little bit more risk on, and it's because most of the folks who have made their money out here has been in tech and has been from taking risks, right? So they're willing to take maybe bets that other folks wouldn't. New York's a little bit more show me the money, show me the financials, and walk me through things. Miami's probably a little bit of a mix of both, and then maybe Austin or Texas is a little bit more of, okay, how can we do this capital efficiently? And so there's different flavors of capital, and that's some of the things that I've observed across some of the major venture markets in the States. Just as a piggyback off of Phil, what you were talking about specifically with family offices are a different kind of investor, right? And there's different types and flavors of investors that you'll get in different regions and geographies across the States.
Which to me actually seems to indicate even more of the reason of what Sarah was talking about was like you needed somebody who's fluent in that region. Like I'm not fluent in Texas, right? But I know enough people in Austin that I can pick up a phone and say, "Hey, I got somebody who looks like this, and I know a guy who knows all the little pockets and ins and outs of how to get around this great state of Texas." Period. So, which actually leads me to another question because I know we're running close on time, so we're keeping an eye on that, but. Why would you tell somebody not to come to the US market? I could start off with my simple example where someone said they didn't have a budget, they didn't have a plan, and they didn't have a solid understanding, right? That was one of the recent companies. There's another company we met 18 months ago. We worked with them for 6 months. They were like, well, when the market looks like this, it would be a good time for us to go. But right now, it makes more sense for us to keep growing in Spain and in Europe because inside the EU, the regulatory environment and the growth environment and the things that our different partners can do with us, we're going to grow faster here than trying to take that big bite. And it seemed to us to make sense to wait until they had a real opportunity to leverage their European traction to drive US traction. So for us, there were like two good reasons to say, you don't want to come here yet. You need to pause and think about it. Anybody else have others that come to mind?
I mean, simple one is just product market fit, right? Like even just problem fit. Find the problem fit first. Be clear that you don't just have a technology that's superior to your competitor and therefore everyone should want it, right? Or you got great research behind it. That's nice, but that's an innovation that's not yet a company, right? What you want is a clear understanding of what problem your product and service are solving and what are alternative ways of solving that problem. And that doesn't even have to be a company that you would recognize as a competitor, right? Like you have an entertainment product, you think you are competing with other video on demand platforms. Well, maybe you're competing with people going to a soccer game or, going to a nice restaurant. Just like a simple example, right? But think of it from that space and make sure that you as a founder have actually talked to enough customers who are saying, yep, that would solve a problem that I have and that I'm ready to pay money for. And make sure you've done that not just where you are, but with enough companies in the US, and you have actual signal, you have MOUs signed, letters of intent, or things like that, right? And then stage two is, okay, you want to make sure that there is also market fit, as in these things are not just sort of anecdotal, but that there is a lot of people who look like these customers that you have proof of concept, proof of value with. And then, there's any number of operational tests that you can check out whether it's a good time or not. Are you able to personally commit someone from your, executive team to come here for a bit? Do you have the regulatory clearance to do other people's?
Yeah.
Sort of then goes down a little bit more into the like playbook kind of ways that you can go through. But I think every single person in the room here has built a ton of expertise around helping you to go through these initial checks and balances. And if you don't have that yet, we'll have some sort of way of lightweight getting you started and getting you through that validation so that you can feel good about placing a bet on the US market.
Yeah,
I'm thinking about, oh, go
if I
ahead.
could, yeah, add to that, I think really understanding your deltas are really important. Understanding your delta between, as Carl was saying, your product market fit for where you are and what that looks like in the US, but also who your ICP is and who it needs to be here, what your differentiators are, and are those really differentiators for this market? And who your competitors are. I can't tell you how many times, and I'm sure you all have experienced this, where you'll talk to a founder and they claim to have no competitors. It's like, well, you do have competitors, and you have to view your competitors through the lens of whoever your ICP is, who's going to be making that purchase. And if you're not looking at the competitors through the same lens they are, there's going to be a big gap there in who, maybe even who your ICP is. So I think doing a really strong, compelling delta analysis for all of these things. And if you find it's not to say that you can't come and build out in the US without having these things answered, but you should really do a lot of heavy thinking around that. And then just, I think, I can't remember who said it earlier, but just really clearly understanding why. Why is it important to expand within the US? What is it about the US specifically that will help you meet whatever goal or need that you have? And so I think those two things, really doing a compelling delta analysis plus the understanding why.
You just said one of my red flag things, which is like, I don't have any competitors, right? That the minute I hear that, I'm like, I'm not sure your product makes any sense. If no one else has considered do or has done this, has considered do it, there might be a reason for that. And I want you to dig a lot further on that. And like Carl said, it might not be obvious who that competitor is, but it does scare me if you legitimately do not have a single competitor. I think you had something else to say, but I got triggered.
I muted because I knew you were
I'm going there immediately. Yeah. Yeah.
Yeah, it's one of those things. And Carl said it, right? Your competition for your app may not be what you think it is. It could be the fact that people go, I'm just going to go watch a movie, or I'm going to go work out because I don't want to give my attention to that thing. And you have to understand what that is for the people in that market that may be different than yours. I'm curious about, and I think we have time for one more question, is the distraction avoidance issue. Like, if somebody's looking at the U.S. market, they first go, well, it's a big market. Well, people say that about China, but doesn't make it a great place for you to go to. So yes, it's a big market, and maybe it's a springboard to the world. But if you have to change what you're doing significantly in order to be successful in that market, is it worth it, or is it a distraction? If you're looking for somebody who resonates with your ICP, is that the best path for you to go? I'm It's a difficult thing to try and figure out if someone's making that right decision or not. But how do you get an indication that they're on the right track? I guess is the way I'm thinking of it. Like if they're on the wrong track if they say I have no competition, right? But how are they on the right track?
Yeah, no, totally. I feel like that kind of question connects with the previous one in the sense of like it's all about focus. And in that sense, obviously, like you brought a really interesting point of like this kind of like how I know I'm in the right track. And I feel it's a really like numbers game. In the sense of like I always tell the founders, okay, first phase is kind of understand the market and see is why US or not why US. And that's why I feel like it's all about like getting out there, talking to your potential ICP, And then like seeing there on all the kind of customer interviews that you do, if there's a common pattern that you can solve and you identify certain problem that your product solves. Because yeah, I don't care about, I always tell the founders that I work with, I don't care about your product. Tell me a problem. What are you solving? Like you need to be kind of the therapist of someone in the sense of, look, I have this frustration. How can you help me to ease that frustration? And also, I I see here when I see like it's a numbers game, like when I even was leading the growth in a startup, sometimes some of the problems that I saw that previously my previous founder made or like some founders make is that sometimes they grab someone as a case as their ICP and they start overbuilding their products and over personalizing that products and then they realize that there's nothing like that. So that's what I feel it's a lot of like doing this prior research to find these common patterns and see where there's like kind of a recurrent use case that opens you more doors. Because at the end, if something works and there's a problem out there that a lot of people are experiencing, it's gonna unlock consequently. So I feel it's all about like doing this numbers game and be able to filter things out in order to get the right info to build the right product. And
For
keeping
sure.
it
And I think
simple.
you
And
can
keeping it
unpack.
simple.
No, no, for sure. It makes sense to get that validation and truly understand not just why isn't it working, but also when it works. You want to understand equally what are we doing right and is that repeatable, which is what investors are looking for, right? So one simple thing that you can do at home is unpack your go-to-market into like three core layers of the pyramid, which at the bottom you have product, and do people have the same problem that product solves also in the US market. There's a layer on top of that, which is essentially pricing, packaging, all the different ways that people could go about buying your product, which might be very different in this market as well. Maybe they don't want to pay based on seat. Maybe they want to pay based on usage, or maybe they feel like whatever you bundled in that package is not what they're ready to pay for, and you need to structure it differently. That's much easier to do than a product change, by the way. It'd be great if you only had that challenge, right? And the top layer is always sort of the messaging level, right? Like, how do your salespeople talk about it? How do you message this in the marketing? Again, might vary drastically market to market, but if you know that you only need to change how you talk about it, great. There's a lot of momentum that you can build quickly based on that. So try and see with all the conversations you can have, can you go through those layers? Can you find somebody like, what Sarah was saying, who locally understands the market, can help you do that? You can even model it and do fancy things like, set up synthetic persona in AI if you have like the right user researchers helping you. But be intentional about it and go and unpack your go-to-market.
I think there's a whole another session to be done about how to leverage verticalize AI to empower companies to test markets and do all this other stuff. Maybe even a whole series. But we're unfortunately have flown through an hour, and want to just get a couple seconds for first thanking everybody, and then quick parting shots before we wrap up. So anybody, given what we thought. I'm tempted to kind of run around the room, but if anybody wants to come in and say, what are some parting shots that you have given this conversation? If you would give one tip to a founder or something you would leave with them that you think resonates as most important right now going into the break, what are some thoughts?
I realized I said something earlier and I didn't position the other side too. But trust through education works for founders educating VCs as well, right? I love when I meet a founder and they can teach me about a product or a market or something that I don't understand already. And I may push back and I may challenge you, but if you can educate me, again, I now have that trust in you and you're much more likely to get a check out of us.
And you've already gone out there and like did what 99% of people at home aren't doing, right? Like you were brave and are dedicating your time to building a new thing, and you're taking a risk. And that is doing something inherently right, that you should feel really, really good about it. And having taken that step is sort of all that matters. Everything else you can figure out from there with the right support.
I would
Super.
say, oops, sorry. Go ahead, Phil.
No, go ahead. I was going to ask if it was next. Go ahead, Sarah.
Just find the right partner. Find the right partner who's already embedded in the culture, who's embedded in the systems that work there. You're going to be ahead of the curve if you do that instead of starting from scratch. that's my best advice.
Marta, Micah, you guys represent some of those great partners in the US. What are some of your tips?
Yeah, no,
Partnership.
totally. I would say, like, obviously, first of all, like, if you're looking to see if US market could be your potential market to unlock, obviously, I would try to obviously leverage different. For example, there's a lot of government entities in your main countries that they are doing different sponsor programs. So this type of launch pads, just to like a weak acceleration or things like that, are really good to like get you some sense of like, okay, is this the right time or not? And then also on the other side, I would say like my biggest tip that I learned, like scaling a startup in the US and working with all the founders is listen. In the sense of like be the elephant on the room, like just listen, don't pitch your product, don't try to verify your hypothesis, and really unpack what are the pains that people are having and your potential ICP is having, and see how you can help him out in that sense. So yeah.
And then I'll piggyback off of Marta there again. It's, that those pain points, those use cases, those ICPs are ultimately what lead to traction. And if you have traction here in the US, and that's probably your why as to why you want to expand here and why you want to try and fundraise here. So traction, and start with why.
Yep. I love that. Start with why. Always asking. But I think I would say it can all be, I think all of the things we've talked about can feel a little overwhelming for somebody that's coming in, not really knowing where to start, how to tell if they're making traction. So I would say start small and stay focused, be consistent. Pick a point to start with and just start picking away at it, building out that information, that data set, and it'll get there. Start small, stay focused, just be consistent.
I love that. Very little add to I just think there's the funding will be harder than you think. It may take a little longer than you think. And you have to have a real plan for what's realistic. I think the listen point that Marta made is you really have to listen to when someone's selling to you. In Silicon Valley, we'll say something's hard when we really mean you're out of your mind. This is insanely hard, right? Or there's 20 people I know who do this, who grew up down the street. How are you going to make a better noise than they are? But the thing that Ashley does, if we're sitting there after doing karaoke and I lean this person, I go, look, I really like you. I want you to succeed, but you got to understand this room full of people, you're going to have to figure out how you're going to outcompete them. So let's figure out how we're going to do this together. That creates those, I think, those trusting moments to really reveal and for someone to understand the depth of what you're saying. We've got to create those moments if we're trying to serve these folks and help them to be successful.
And the one thing I would say is, and thank you guys, nice to see everybody. But the one thing I would say is your financing strategy is as important, if not more so, than your execution strategy. Execution is required, financing is required, and most founders are focused on execution and don't necessarily know how to focus on financing. But my advice would be the best companies are able to do both, but they're equally important. Without one, it's hard to do the other.
Well, with that, well, let's say thank you everybody for showing up. Thanks everybody who gave their time to put this together and also to be a part of it. We had a bunch of people who signed up and a bunch of people who said that they want to see the replay and the summary. So we're going to share that all with them. We might cut some of this into some short form to share also through our media channel and to really engage with the folks who couldn't attend. So thanks again for everything, and we look forward to working with all you to serve the companies we aim to serve and building the economy that we want to see for the future. Thanks a lot, and have a great day. We've already put our information in the chat, and I think if anybody who's in the audience wants to reach out, I'm very happy to reach out and connect you with any of these great folks. Thanks, everybody. Have a great
Bye, everybody.
Thursday.
Thanks, everyone. Happy holidays.
See you.